Hey, it's Dan McCulley here in Seattle, also known as DMAC, and today we're going to talk about moving averages. I know a lot of you guys have been waiting on this video, so I'm finally going to talk about some moving averages today. There's a lot of different ones that I use, and I use them all differently. There's certain ones I use for scalping. There's certain ones I use to help me identify the trend. And there's ones that I use to get those perfect entries. Well, you can use all of them to help with your entries. So if you are someone who is struggling with your entries, the moving averages, it may just be what you need because they will definitely help. So right now I have, I think, yeah, this is GJ on the 15-minute pulled up on the screen, one of my favorite pairs. I know GJ is crazy sometimes, but it pushes pips, so I like it. And I also like the challenge. I'm trying to master this pair. So I will be trading it a lot. But anyway, back to the MAs. So this is the 2017 Agman. This is the old version. And I've added the MAs that I like to use. I listed them over here and kind of color coded it so that you can keep up and know which ones I'm talking about. And this is the chart that, it's giving me the name Picasso. I'm the lady that paints the charts, as they call it, which is fine because Picasso was a famous artist, so I'll take that as a compliment any day, right? Okay, so we got the 8, and these are all going to be exponential moving averages. And I know a lot of people want to know what's the difference between the EMA and the SMA. Now, I do use the 800 simple moving average as well, but it's not on this one right now. The EMAs are really good for scalping because they're going to give you a quicker price reaction off of them, if that makes sense. It's kind of hard for me to explain sometimes, but my mentor, he kind of simplified it and just told me to think of, the EMA, like I said, it's going to give you a quicker price reaction. That's why, a lot of people use them for scalping. Whereas the SMA, it's more like long term. So if you have the 800 EMA, you can look at that, think of that as a 4-hour trend line. And then if there was the 800 SMA, the simple moving average, you can think of that as a daily trend line. So hopefully that don't confuse you, and hopefully it makes a little more sense. But right now we're just dealing with the EMAs, the exponential moving averages. So the higher the number of the moving average, the stronger it is. And that's why the 800 is one of my favorites. Yeah, it's one of my favorites because you can get some really clean entries off that 800, and I'll show that to you in a minute. But so we got the 8 moving average, and then the orange is going to be the 14, the yellow is going to be the 20, the 50 is going to be this lavender color one here, the 200 is this dark blue, and then the 800 is the lime colored one. All right, so how do I use these MAs? And just looking at them, you can see how good they play off price, right? So anytime you get that cross up, just think of them like a roller coaster. And if it's coming and it just kind of scoops the market up, you're looking to buy. When you get that cross down, when it starts pushing the market down, you're looking to sell. And they're also good to help you identify the trend. And I'll tell you which ones I use to help me do that. So I guess the standard is the 5 and the 13. Now, I don't have those on this chart, but I'm just going to hop over. If you guys are using the Market Makers template, let me jump over there to that. They use the 5 and the 13 on here. So the 13 is the red one here, and then the 5 is going to be the yellow one. And I posted this indicator here. Let me see if I can pull it up. The crossover arrows alert indicator. I did post that in the Telegram group. And so you can use this. You can set it to whatever 2 MAs you like. And once they cross, you'll get these arrows. Like you'll get the green for the buy. You get the red for the sell. Now I do use this on my other charts. And it's cool because you can have this on your charts, but you don't even need those MAs really. But this will let you know when they cross. So for those of you that have this template, that's what they use. They only use the 200, the 50. This is the 800 on this one. And then, the 5 and the 13. But I don't know. I just really like them because I struggle. Well, I'm so much better with my entries now because I use the MAs. And there's, when you get those pins to the MAs, my eyes are just like, oh, okay, it's ready. It's ready. I can enter, and I know that's a constant struggle for a lot of traders. I mean, I still struggle with my entries sometimes. It's like, sometimes I can be on point with them, and then it's like everything I know just goes out the door. And then I'm like, what was that about? But if you're patient and you look for those wicks or pins to the MAs, you'll be surprised at how well your entries can be. So let me start with I'll start with the 8 and the 20. So let me see, the 8 and the 20, which is going to be, I'm getting the colors mixed up myself. So the 8 and the 20, which is the whatever, I'm going to just call it pink, whatever color that is, and the yellow one, so when they cross, that's a sign, to enter either for the buy or the sell, depending if they cross up or they cross down. Now, another thing about the 8 and the 20, I use those a lot on TradingView because I'll show you. So you see how, all your MAs are pointing down. So we're in a downward trend right here on the 15-minute. And when you're on the 15-minute chart, you don't want to trade against the MAs, especially when they're this close, like to price. Don't trade against the MAs. Now, if they were a little bit further out, you can do a counter trend, but it has to be at least, 50 pips or more away. So like, and we're talking about the 50, not the smaller MAs. We're going to go off the, the 50. And so the 50 is only like 25 pips away. So you wouldn't want to try to trade against that. And if you have the TDI Pro, it's letting you know that, hey, we're in a downtrend. This is a short trade. Now, sometimes it'll say weak short trade or weak long trade, but this is showing you that this is a strong downtrend. This is why I like the TDI Pro, because it would also show you the way. So the 50 on the 15, you want to watch that. But I was talking about the 8 and the 20. So you can also use the 8 and the 20. The way that I use it is if price closes above this 8 moving average, and then if it continues and it closes above the 20, then that lets me know that, okay, this is going to keep going. It's a possibility that this could be a reversal. But again, this is not a good example because the MAs are so close, but it looks like GJ is trying to push up. So that's one way that I use the 8 and the 20. If it crosses the 8 and closes above, then it continues and closes above this 20. That lets me know that it possibly can continue pushing up. But like I said, I'm looking at the bigger MAs. And there's some traders only use the 50 and the 200. And I'll talk about those in a minute because those are really good for helping you identify the trend. Some people have a hard time identifying the trend. You think you're in a downtrend, so you're selling, but you still may be in an uptrend. And you wonder why, price is pulling back on you. All right, so when I scalp, I told you I don't use the 1 minute or the 5 minute, but let's see something, how it looks on the, so you're going to get different, I'll just stick to the 15 minute. So when I scalp, the MAs that I use when I'm scalping, and I'm going to erase some of these now as we move along. So I don't use the 8, but you can use the 8 and the 20. It would be perfect. But what I like to use when I'm scalping, and I got this from ZenFX, they have a strategy, a EMA strategy, and another strategy called hyper scalping, which is really good. But let's see here. We're going to get rid of the 20 because I don't use that one when scalping either. So when I scalp, sometimes I'll use the 14 and the 50. And sometimes I'll use the 10. The 10 is not on here, but let's just change this I'll just show you what the 10 looks like. You can use the 10 simple or the exponential. So they all look kind of, it just plays a little bit closer. The smaller the number is. Like if you look at the 3, it will basically just run through the candles almost. But the 10 is really good for scalping. You can use the 10 on the smaller time frames. Like this is the 5 minute. I'll show you how it looks on the 1 minute. See the 1 minute, I don't know. The 1 minute is very, it's a beast if you're trying to scalp on the 1 minute time frame. I have done it in the past. It gives me anxiety, so I don't do it. I don't know. But the 5 minute is cool. And so you can see I changed the 14 to the 10, but you can see like there's that little dot. I would have entered up here. But let's say you didn't have this dot. And you can use the MAs. You can go off this 200. You see the pins to the 200, or you can go off the 10. So just like anything else, you're waiting for, it's kind of like the angular momentum indicator on the new Agment version. You're waiting for price to close below the MAs. So you have, that one almost did, but you have this next candle that closed below. So you can get in on this candle here. Plus you got this wick, the wick to the 200. That's what I mean when I say the pins to the MAs. So you got the pin to the 200 right here. You can get in that. You will not have any drawdown. You can take that down for a quick 50 pips. But let me put this back on the 14 because that's what I use on one of my charts. I have different MAs on different charts. I know it's kind of a bit much, but anyway, you can see the difference. So this is the 14. You see it's kind of down a little bit further, whereas the 10 was more up here close to the 200. But again, same thing. You got this close, this wick right here below so you can get in on that next candle. Yeah, you wouldn't get in right here. Like I said, you can use the 200, or if you're going off the 14, you're going to want to go off of this bearish candle. So let's see. If you're using the 14, yeah, once it starts, as soon as you see that it may start hooking down, you get in right there. You missed it still give you about 45 pips, which is good, because this is on the 5-minute. But as you can see, there's no drawdown. It's just going to drop. So that's how I use the 14. And you can also wait for the 14 and the 50 to cross. Now that's a little more conservative entry. You can wait on that cross and you can still get 35 pips. So if you just go off of the 14, this is going to be the more aggressive entry. If you want to just use the little dot, that's like really aggressive. But you know, you have to have other confirmations. But this wick here, that would have been a good confirmation, followed by this dot and then this pin to the 200. You could have got in and caught 50 pips, so 20 pips more. But if you want a safe entry when you're scalping, you can use the 14 and the 50 cross right here. Like I said, you still get 35 pips, so that's good, right? Now let's talk about the 50 and the 200. So the 50 and the 200, I use those. Let's see. Okay, I'm a little confused because I have different colors on different charts. But the 50 and the 200, I use those to help me identify the trend. So anytime you have this 50 below the 200, you're in a bearish market. All right, so you're looking to sell. You're not really looking to, especially on these lower time frames, you're not really looking to buy. You're looking to sell if you're trading the trend. Like I said, you can do counter trend trades. People do them all the time, but you have to make sure that price is like, you know, at least 50 pips or more from this. And see, GJ is still in a downtrend. Like you could counter trend up to here because it's like 44, so it's almost 50. That would be a situation where you can do a counter trend. Sometimes it may go all the way up to the 200. So let's jump back down on the 15. And if you go on the higher time frames, this is why multiple time frame analysis is important. You'll see the bigger trend. And I am going to do a blog post on multiple time frame analysis. I just haven't gotten around to it. I haven't added any content to my blog in a long time, but hopefully I'll get around to doing that. But I've been too busy catching pips, so I don't mind. As you can see, you got your 50 here and you got your 200. So this is showing you on the 4-hour time frame, this is showing you an uptrend. Let's look at the daily. And even on the daily, it's still, the 50 is still above the 200, but they are below the 800. So as long as the 50, just remember, as long as the 50 is above the 200, you're in a bullish trend. When it's below, you're in a bearish trend. So the 50 and the 200, like I said, some traders just use those two MAs, and they, to me, I think it's more of a long-term trade because it is going to tell you when the trend is changing. So if there's a shift in the trend, you can use the 50 and the 200 MA to help you identify that. So you can see right here, this is on the 4-hour. you can see right here where it crossed up. And like I said, it'd be more long term. 445 pips. Well, I don't know if it really crossed. Yeah, it looks like it crossed. But actually, this would probably be more of the entry right here. And you got your blue dot going up because you got that long wick to the MAs. All right, so once the 50 crosses above the 200, that's known as the golden cross. So that means a bullish trend. When it crosses below, let me see if I can find where it crosses below. Right here. So when the 50 crosses below, that's known as the, what do they call that? The death cross. That lets you know that, all right, a downtrend is coming. So that would be a bearish market or trend. That's why, you know, the bears are still in control. That's why GJ, even though this agment signal is showing a reversal, but this agment signal probably was here first, then it probably was here, now it's here. But I wouldn't pay attention to this. You know, and this is where a lot of people mess up with the agment, because they're looking at this and they're saying, okay, well, this thing is about to go up, and they'll enter it. But I don't know if the white arrow appeared or not, but it's not there anymore. It probably hasn't appeared yet, I'm assuming. But this is how you can use the moving averages for that additional confirmation. You know, you're thinking, okay, well, this is going up, but then you come up here and you say, well, I got the 50 crossing down on, you know, crossing down below the 200 MA. So we're in a bearish market right now. And then you got your TDI that's just confirming that. So a lot of the times, you know, this arrow will throw you off. And I think that's what confuses a lot of people. But like I said, this is the old agment, so it doesn't have, you know, the angular momentum thing and stuff like that on there. So the 50 and the 200, just remember that. You can use those to help you identify the trend. And it's going to be more, I think, more of a long-term thing when they cross. So they don't cross as much as some of the smaller MAs would. So that's why I said when you're scalping, you know, the 8 and the 20 is good. The 14 and the 50 is good. You know, and the 14, 50, and 200, that combination works good when the 50 is below the 200 or above the 200. So, I mean, it can't go anywhere else, right? So that's just something to be aware of. Always be aware of that 50 and that 200. That will let you know what type of market you're in. And then my favorite MA is the 800. And this is really when I started like getting better entries. Is when I started using the 800 MA. I mean, it's just clean trades because, like I said, the higher the number, the stronger the resistance or the support is going to be. So when you get that pin, like it consolidated, it struggled right here. But when you get that pin to that 800, I'm looking to enter because that's 63 pips. Easy 63 pips. No drawdown at all. And another example is right here. Even though you would have been able to get in here with the pins to the 200, you could have entered here. That's 160 pips. But you could have entered here. That would have been the first entry. Let's say you just missed it and you wanted to like, oh, the trend is, this is still a downtrend. This could be a second entry right here. This pin to the 800. Again, no drawdown. If you notice, if you look at the MAs, once it closed below the MA or once it's rejected by a MA, there's hardly ever any drawdown. Now, I'm not going to say never. There may be just a little bit, but majority of the time, just depending on when you enter, you can get those clean trades. So from the 800, you still would have caught 126 pips. And so those are mostly mostly the MAs that I like to use. Let's see something. And so with the 800, every now and then you will get, it will break and retest. Sometimes it'll break back below. So again, you just have to be aware and conscious of what price is doing. Look for those wicks. The wicks do not lie. And if you're unsure about, like you don't know if this is going to break and then go back above the 800, that's why I was telling you guys, simple trend line like that. It's just for additional confluence. You know, another confirmation. You know it's going down. You're not sure. You want to make sure that it doesn't come back. It's respecting that trend line. It's already given you 1, 2, 3, 4 touches. It's not going above that. So it's going to drop. So I don't know. Let me see. Is there anything else I'm leaving out? No, I think that's about it. So with the, this is the MM4X software and platform. I really like it a lot. But these are the main moving averages. They use the 200, which is the white. If you've listened to Steve Morrow's video, he refers to it as the Mayo. So that's always the white 200 MA, you know. And then the you got the 50 is this aqua or whatever color that is, and then the 800 is the blue. And really, those are really some, I mean, I think they're really good. These are the main ones that are really good to help you with your entries. You can just see, you can just flip through charts, you know, and you'll see when you get those pins to those MAs, they're dropping. Or if they're rejected, it usually pushes up. Let's see, like right here, it did go a little bit below, but right here, that's why I say you wait for price. You want to make sure price closes above the MAs or below the MAs when you're selling. Like you got 1, 2, 3, 3 candles close below, then this one, then you got the wick up and then the drop. So if you guys want to, if you don't want a lot of moving averages on your charts, you can just use those, the 50, the 200, and the 800. But if you want to use it for scalping, you can use the 8 and the 20, or you can use the 14 and the 50. So let's look at those real quick. I'm going to put all those back on here. Okay, so let's look at the 8 and the 20. We're going to get rid of that. Well, the 50 is still going to be important. The 200 is still going to be important. Okay. So the 8 and the 20, those are good for scalping. So you got the, you know, when they squeeze like this, the MAs, when they're all bunched in there together, you can expect or anticipate some type of cross up or cross down. So that's something to look for with the moving averages as well. But when you get the 8 and the 14, I'm sorry, the 18 and the 20, you know, you got the cross there, just carry it on up, and then you can use the 8 because it's going to run a little bit closer to the candles. Use that as support and resistance, you know, up, up, up. How many pips would that have been? So you get in and across. Let's say they crossed about there. this is the hour time frame, so of course that's over 200 pips. But let's jump down to the smaller ones. So when you're scalping, it looks a little bit better. So I mean, they pretty much all, it's the same principle, just different numbers. Um, so you got the cross, you got all three crossing right here. So I would be really confident in entering right here and just writing that down. Then on the 15 minute, on the 5 minute, for those that you like the smaller time frames. And you can see how good those dots are. Sometimes they show up right when they cross too. So this would be a good signal here. You got all three crossing here. I would be confident. You got that wick up to the, what is that, the 20? Yeah, I would enter there and take it down. And then you also have this little dotted line, which is like some support or resistance on the agment. Another one, here's another cross. So the 8 and the 20 is going to be a little bit late. I mean, it's a little bit safer, but you still catch 40 pips. Go to the 15. Yeah. And as far as scalping, I like to, I use the 15 minute and up. I don't really deal with these lower time frames like the 5 minute and the 1 minute. But when I'm scalping, I think starting on the 1 hour, trying to get, analyzing the 1 hour and then dropping down to the 30 for your entry is perfect for scalping, I think. But that's just me. I don't know. Some people don't like to wait that long. I think that's why they like the lower time frames. You just like to kind of get in and out. So the 8, what did I say? The 8, okay, yeah, the 8 and the 20. Those are good for scalping. But like I said, the 13, the 5 and the 13 are standard. You can use those for scalping too. So it just, you just have to play around with different MAs and figure out which one you like and which ones you want to use. Just try a couple, see how they play off price, because people like different MAs. But that's pretty much it. So let me pull this back up. Let me put all of them back on there. And like I said, you can definitely it'll just go with the flow of the market, And like I said, when you get this squeeze, all the MAs are like bunched up together. You can anticipate some type of reversal or breakout. I'm trying to see something. Yeah, so they're perfect for entries. That's all I can say. Just play around with a couple different ones. And if you guys still have questions about the moving averages, yeah, just let me know. And if you guys want to hop on a Zoom, excuse me, to go over some things, if I'm free, sometimes I'm really busy. I'm not a full-time trader, so I do have other obligations. I know it may seem like that's all I do, but I'm also an insurance broker, but I do work from home, so I guess I kind of got it made when it comes to that. So a lot of times I'm busy with insurance as well, but yeah, I'm always doing something. But if you guys ever want to hop on a Zoom and just go over some things, and you can kind of show me your issues you're having or what you want to see, because sometimes I know the video is kind of a quick run through of things, and it may help to be able to, actually slow things down and go through some things. But I don't know what type of issues you guys are having. If, I don't know your trading style and things like that. So that's why I'm saying, if you want to hop on the Zoom and you say, hey, I'm having problems with my entries, this is what I'm doing, we can hop on there, you can show me, and then, I can give you some suggestions or let you know what I think, and hopefully, yeah, give you some tips that will help. But that's it. That's all I have for the moving averages. Hopefully you guys find this video helpful. Again, you don't need all these MAs, but I like them because, like I said, I use them all. But let me see. I don't have that many on the new AgMet. It doesn't really look that different, does it? But I don't have a lot of the smaller MAs. I have the 10 simple moving average. That it runs really smooth. This is a good one for scalping too. This is the 800 simple. Again, you really don't need both of them. I'm just crazy like that. I like them both because sometimes, you know, sometimes the it's really weird. Sometimes they don't show up at all. It just depends on the time frame. Sometimes they don't show up, sometimes they do. And sometimes you'll get 1-800 and not the other one. But when you get both of them, when they're lined up, let me see something. Sometimes they both line up like this. It's kind of hard to, even though this is consolidating, when those 800s both line up, that's some pretty strong resistance or support. Remember, the 800 is going to be the strongest one. The 200 the next, the 50 the next, and then it kind of just fades out the lower the numbers get. But I always use the 50. I always use the 200. I always use the 800. So those are three that I like to have on my charts. And then for scalping, you can just use the 10 by itself. You know, when the 10 closes, when the price closes below the 10, you can just use that too. Like you got this wick here. Let's see. This is the 15-minute. You got that wick. That's the same one. So it's the same thing. It's just, this is just the 10 simple moving average. And remember I said I got the 5 and the 13 cross alert on my chart, but I don't have those MAs on there. So this alert here is a good one. If you have, if you're paying attention to price action and what it's doing, like it closed below the 10 here. So you can enter on this arrow. And here the AgMet signal is actually pretty good because it popped up right along with the dot. So, and then you got almost like a double top. That thing always scares me. I always like a double top, 1, 2, up, pull back, another double top, and then the drop. So that's that market maker's setup. You know, you got this is, 15-minute. It's perfect setup. You got the 3 pushes up. You can see right here off the 800. So that would have been like 1 pull back, then level 2 pull back, then level 3. So that's the first leg of the M. Did a little consolidation. Then they gave you this little bullish candle, created another little top here. And what you want to sell the second leg of the M. You're using a trend line too. Yep, you get in right there. Sell that. And you don't have to worry. Well, you may have just a little pullback, but if you draw the trend line, you wait for the break. You got the retest here. If you enter on the retest after the retest, no drawdown. And that's why, to me, trading is going to be like 80% patience. And we all struggle with it. I do too. Sometimes I just feel like, get too excited. I don't know. It's just what we do. But we have to be disciplined and you have to have patience. So if you're struggling with your entries, patience is going to be the key. And then just try using some of these moving averages. And I think that's it. I'm not going to ramble on too much longer. So this is what I use, the new AgMet. I don't have as many MAs on this one, but my main ones are, like I said, the 200, the 50, and both of my 800s. Now you don't need both 800s. You can just use the 800 EMA and you're good. For the scalping, try the 10 and the 50. You can do the 10 and the 50 cross too. That's a good one. Um, yeah, that'll give you some good pips, the 10 and the 50 cross. It's going to be a safer one, but if you're aggressive, just use the 10. Wait for candles to close below the 10, and it's a good entry out as well. All right, so the next video, I will talk about Fibonacci levels and extensions, but that's all I have for you today. It's Friday. Hope everybody have a great weekend, and I think we caught maybe over 300 pips this week. So for those of you that, if you're out there and you want to catch some pips, from what I hear, a lot of people are still struggling with the agment, even if they're following the rules. I do have a private Telegram group, so if you guys want to join and be a part of that, hit me up on Facebook. I will leave my link below this video so that you can reach out to me on Facebook, and then I'll get you the link over to the Telegram group. But so far, I think the Telegram group is doing well. Hopefully, it is helping people understand and learn a few things, because I do share some of my trading view charts and markups in there as well, along with the signals. All right. So below this video, you'll find my Facebook link. And, for those of you that wants this scalping system, I'll go ahead and throw that link below the video too. All right. So happy Friday, and I'll see you guys in the next video.